TDK 6762 Beginner's Guide. If you've ever charged an iPhone, you've almost certainly used a TDK product without knowing it. TDK is the Japanese electronic components giant whose batteries sit inside most premium smartphones and whose tiny magnetic heads make hard drives actually read and write data. Quick reminder before we go further, this is an educational walkthrough of the business, not investment advice. So, what does TDK actually do? TDK makes the small but critical electronic parts that go inside other companies' finished products. Think of it as a picks and shovels supplier. You don't buy a TDK product at the store, but you use them every day. The business runs across 5 segments. The biggest by far, at about 55% of revenue, is called energy application products. That's mostly batteries, specifically lithium-ion polymer batteries, the slim pouch-style cells that fit inside phones. TDK's battery arm, called ATL, is the world's #1 maker of these polymer batteries and the dominant supplier to Apple iPhones. Total annual revenue is about 2.5 trillion yen, which in dollar terms is roughly $16 billion. The next biggest segment is passive components at about 24% of revenue. These are capacitors, tiny parts that store electrical charge, plus inductors and filters that clean up electrical signals. Then there's magnetic application products at about 11% of revenue. The headline product here is HDD heads, HDD meaning hard disk drive, the older spinning disk storage. TDK makes the microscopic read-write heads that hover over those spinning platters, and it holds roughly 50% of that entire global market. The fourth segment is sensor application products at about 9% of revenue, things like magnetic sensors, MEMS, which is short for micro-electromechanical systems, basically tiny mechanical chips, plus temperature and pressure sensors that show up in cars and factories. The remaining 2% is a small other bucket. The supply chain is straightforward. TDK buys raw materials, ceramic powders, lithium, cobalt, nickel for batteries, rare earth magnets, and turns them into finished components. Those components flow out to smartphone makers like Apple and Samsung, hard drive makers like Western Digital and Seagate, automotive Tier 1 suppliers like Bosch and Denso, and factory and data center customers. Roughly half of TDK's end market exposure is information and communications technology, so phones, laptops, data centers, with another 20% in automotive and 25% in industrial. So who does TDK compete with, and how does it win? The honest answer is that TDK competes with different rivals in each business, and its competitive position, what investors call a moat, meaning the thing that keeps rivals from catching up, varies a lot from segment to segment. Overall, the report rates TDK's moat as narrow at the group level, but wide in its 2 crown jewels. The first crown jewel is HDD heads. TDK has roughly 50% of the global market, built on multi-decade process know-how in magnetic recording, the physics and manufacturing precision needed to make those tiny read-write heads is extraordinarily hard to replicate. Its customer base is concentrated, basically Western Digital, Seagate, and Toshiba, and switching suppliers in this space is rare. Hard disks overall are a mature, declining market, but the specific subcategory called nearline HDD, the high-capacity drives used to store AI training data and cloud archives, is actually growing fast, and TDK is positioned right in that sweet spot. The second crown jewel is the ATL battery business. ATL is the world's #1 maker of the slim polymer-style lithium-ion batteries used in premium smartphones. The big competitors are Samsung SDI, LG Chem, and CATL, but ATL specifically leads in pouch and polymer cells, the format Apple uses. The relationship with Apple is sticky and multi-year. Once you're qualified into the iPhone supply chain, you tend to stay there. Where TDK is less dominant is in capacitors and sensors. In capacitors, it's typically number 2 or 3 behind Murata, which is the global leader in a category called MLCC, short for multi-layer ceramic capacitors. In sensors, it competes with the European giants Bosch, STMicro, NXP, and Infineon. So TDK is credible in those areas, but not the runaway leader. That mix of wide moat crown jewels plus narrower moat side businesses is why the group operating margin sits around 11%. What are the key drivers for the business over the past 5 years? 3 forces explain the journey. The first and biggest is the ATL battery acquisition. TDK bought Amperex Technology Limited, that's ATL, back in 2005, and that move turned TDK into the world's #1 polymer battery maker. Over the past 5 years, that battery franchise scaled massively alongside Apple's iPhone business and other premium smartphones, until energy application products grew to be 55% of all revenue. So TDK today is really a smartphone battery company with a bunch of other components attached. The second driver is the cycle. The 2020 to 2022 stretch was a smartphone supercycle, helped by post-COVID demand and the rollout of 5G phones. Then 2023 and into 2024 was a sharp correction. Smartphones got destocked, meaning customers worked down inventory instead of placing new orders, and the hard disk business hit a slump. Profit fell hard during that period. Then recovery started in early 2025, and that's the third driver, a major operational turnaround in the smaller segments. In the most recent year, the magnetic segment's operating profit grew almost 700% year-over-year on the nearline HDD inflection, driven by AI data centers needing storage. The sensor segment's operating profit grew over 300% on a new 3-priority market focus: communications, automotive, and industrial. The battery segment kept growing at 16.5%. Across the whole company, revenue grew about 14% in the year ended March 2026, with margins moving up and return on invested capital, a measure of how efficiently the company turns capital into profit, rising to 7.5%. One other thing worth knowing as background: TDK did a 5-4-1 stock split in October 2024, meaning the share count was multiplied by 5 and the price was divided by 5, which makes the shares more accessible to individual investors. Management has also been raising the dividend and explicitly committing to a more capital-disciplined, return-focused way of running the portfolio going forward. To wrap up, TDK is a Japanese components maker that powers most premium smartphones with its ATL batteries and dominates the read-write heads inside the world's hard drives, with smaller positions in capacitors, sensors, and magnets. As you go deeper on this name, the things to keep an eye on as a learner are the smartphone cycle, because more than half the business rides on phone battery demand, and the trajectory of nearline hard drive demand for AI data centers, which is the rising tailwind in the magnetic segment. Reminder that everything here is educational only and not investment advice. If you want to invest, please do your own research and consider talking to a licensed financial advisor.